Alrighty, guys, so let's talk about where this market is. Let me teach you a little something, okay? So, listen. If you look at the trading activity today, what does it remind you of? It reminds you of what we've seen the last several days. The market will open, look like it'll be a good day, right? And maybe even reaches a high, maybe in the first few hours of trade. And then at the end of the day, it just kind of keeps weakening and weakening and weakening. And this is a clear trend. You could pull up the NASDAQ and see this. You could pull up crude oil and see this. You could pull up Bitcoin. You could pull up Ethereum. Doesn't really matter what you do. And very end, right before the trading day closes, maybe it tries to go back up a little bit, but it doesn't even come close to recovering where it used to be earlier in the trading day. And that's what we're starting to see now at this point in time, which is very different, massively different than the market we were in, let's say, a few weeks ago, a month ago, 3 months ago. Because in that sort of market, even if the market opened low, it was going higher by the end of the day. And it would strengthen, if anything, as the trading day went along. And next thing you know, you would close that market and it would be a new high. And it's like, geez, somehow the market magically ended at a high. And now we're in a flipped market where essentially, you end this market and it just is a lot lower than the previous high it had reached. Now, to illustrate this point in even a further extent here, you look at Palantir today. Snowflake and Palantir stock, I guess the stocks jumped at first. They did finish red though. Snowflake stock jumps on Palantir AI partnership, right? Now, you got to understand this market is dramatically different than we were in. Anytime Palantir got any sort of, we're doing a partnership, anything that was remotely good news, Palantir stock was jumping 3, 4, 5, 6, 7, 9%. Boom. Now we're in a place in this market when Palantir could announce a partnership, good news, something like that, and the stock market doesn't go up. It goes down. And so you got to understand we're at a different place in this market now at this point in time where you got companies that have ran huge, even if they come out with new partnerships, good news, the stocks are ultimately not going to do a thing or maybe even downtrend. They can't hold their gains. And you got to understand when you get into that sort of market, if anything starts to go wrong, anything bad happens, the stocks are prepared to go down dramatically in the short term. Dramatically. Not like, down a little bit, like 1% or 2%. No. You get anything bad, sort of bad news for these type of stocks now in this new market we just moved into, you'll see a stock go down 10, 20% in a day. It'll be in a day. And so you got to understand, we're at a very different market and how you approach this market is very different. Now, additionally, what we just witnessed is the AI investor sentiment flip back negative again, okay? So if you look at how investors are feeling about the market in the next 6 months, it just flipped back very, very negative. It had been positive for about 4 or 5 weeks straight after it had been negative the whole year. Now, the thing you got to understand about when you flip back negative is usually many times the biggest moves down in the stock market come over the next few months after you flip from, people were really bullish over to that bearish side. A good example of this is at the beginning of this year. At the beginning of this year, January, people were overwhelmingly bullish on the market. Then we get a flip in February. People start going bearish on the market. And then they just continue to go more and more bearish. And what did we witness? March was really rough for the market. The market actually peaked February 19th, if I recall. And then it bottomed about April 9th. But essentially over that next bit of time, when you had that first flip, that was just a start. And then over that next couple months, people got even more bearish and more bearish and more bearish. So when that flip happens, it's a very important time. So where could the stock market go, over this next 2 months? In my opinion, if I had to guess, I would say lower. If you forced me, let me say this, okay? You're like, Jeremy, you have to place $100,000 wager that the stock market is either lower or higher 2 months from now. Now, I wouldn't want to ever place a bet like that. But if you forced me and I had no choice, do you know what side I would bet on? I'm Mr. Optimist. I'd like to look at the glass half full. But if I had to guess, negative. I would put the $100,000 in the market being lower 2 months from now than it is today, given a multitude of reasons for that, okay? And also getting the confirmation with the way the market's acting now at this point in time. So, no, I don't go selling out of my portfolio or anything like that, but you got to attack a market like this different mentally. This is not the market you got to expect the market to bail you out, where the market just drifts higher and drifts higher. If you're in bad companies, they're going to perform really, really bad in this environment. If you're in very overvalued companies, they're going to perform very bad in this environment if the market can't save you. If the NASDAQ just goes up every freaking day, it's pretty easy to just be in high beta stocks, right? High growth stocks. Like they're just going to go up day after day after day. But as soon as that flips, it gets rough quick, right? And we witnessed that in 2022. For those of you that were not participating in that market in 2022, from the peak in Q1 2021 to that trough in Q4 2022, you watched many of the biggest tech stocks in the stock market go down 50 to 80%. I'm talking Meta. I'm talking Shopify. I'm talking Netflix. I'm talking many of the most respected companies. NVIDIA was down about 50% peak to trough in that. AMD was down even more, if I recall, right? So now I'm not calling for we're about to go into a 2022 situation, but what I am telling you is like, just understand, be mentally prepared that if this market goes south a bit here over this next 2 months, just be prepared for a lot of these stocks to go down 10 to 30%. You have to be mentally prepared for that. If you're not mentally prepared for that, you're not ready to be a long-term investor in this game. You have to be prepared for stuff like that. Now, does that mean all stocks are going to go down 10 to 30% in the next 2 months if the market gets a little weak? No, because there's some stocks that have already been heavily damaged. They already have very attractive prices. Doesn't mean they can't get hit a little more. Keep that in mind. But what you'll see is many times, the more the market goes down, the more people start to get fearful. The stuff they start to float out of is the riskiest stuff, is the stuff that attracts a lot of margin. So those ones sell off the most in that sort of environment. So the stocks you should be buying here recently is a lot more of the value names, a lot more of the dividend type stocks, and maybe even some turnaround plays. That's the stocks you should have been buying here recently, right? As far as if this market goes south over the next 2 to 3 months, right? What are the type of stock, like let's say hypothetically the S&P 500 goes down 10, 15% over the next 2 months. It might not happen, but let's just say hypothetically that happens. What type of stocks should you be buying in that environment? In that environment, you need to be likely buying growth stocks because growth stocks will be hit heavily. You said an S&P 500 down 50, let's just say hypothetically 15% S&P 500 down over the next 2 months. That means the NASDAQ will probably be down, I would say at least 20%, if not 25%, because the NASDAQ's almost like a call option on the S&P 500, right? And so if you get a NASDAQ down, let's say 25%, you're going to be looking at a lot of these growth stocks are going to be down 40% plus. 30% will be customary. 50% is possible. And so that's your opportunity then coming in growth stocks. No different than the best buying opportunities in April were what? Growth stocks. AMD was $80 in that April fall, right? And I mean, look at AMD now. If I recall, NVIDIA fell, I want to say NVIDIA fell under 100 in that April drop. Did it not? Right? You can look at Shopify. You can look at all those type of stocks. Look where Amazon went. Look at just about everything growth related in that April drama we had earlier in this year. The best opportunities to buy were those growth stocks. Look at ELF stock since then. ELF stock bottomed around $50, did it not? ELF stock today, I think you have to pay, $130 for it? $140 a share? That's a little bit more. That's a little bit more. Look what Celsius stock has done since then. So understand when you're already in a crash or a major correction in the market, the best opportunities are the growth stocks, okay? When you're in a raging bull market that looks kind of toppy, your best opportunities are values or divs, and maybe cashing up a little bit and taking some profit. So do keep that in mind, ladies and gentlemen, okay?
Hey, it's Jeremy. I hope you really enjoyed that clip here today. Listen, there are 3 main areas a long-term investor has to understand. You have to understand financial statements, income statements, balance sheets, cash flows. You have to understand and master portfolio management. And you have to have the ability to project what is possible for companies in the coming years. Bearish scenarios, bullish scenarios. All these skills can be learned, and that's the good news. And I'm still just a regular guy who's out here. I just have a lot of passion for the market. I've learned a lot over the last 15 years. I had a tremendous amount of success, and I have a dedication to teaching people everything I have learned in the past 15 years. If I can do it, you can do it too. You can learn all that's required to become a great investor in my private group. The application is going to be down there in the description area. You can click on that, fill out an application, join us in the private group, get access to all my best course curriculums, teaching you everything that I got in my head, and you get ability to join our 6-figure, 7-figure Hall of Fame. We have such a tremendous Discord. It is incredible. So once again, description area down there, there's a link. You can apply to join my private group in there.
So, what's going on here? Well, the blame. The first thing is, like, what's the market going to tell you happened to the market today? The market's going to tell you it's Trump. It's the tariff drama, right? And that was, it's a good excuse to get the stock market to do what the stock market really wanted to do, which was a huge, massive sell-off, right? But obviously, major escalation here in regards to Trump, China, tariffs. It got even worse after hours from what I'm hearing. And so it is what it is. Like, if you want to read through it all in depth, you can read through it all in depth here, right? Now, this also puts in jeopardy, basically, Trump and President Xi were supposed to have a meeting, right? I remember hearing about this a couple of weeks ago, and it was either here on the main channel or on the reaction channel, or maybe it was on my private stock group. I record so many videos all the time, like it's hard to know which channel I'm posting what on. But I remember, like, after I heard this news, I remember covering it in a video, and I was like, this is ridiculous. I'm like, this might not even happen. I remember hearing about that, and I was like, really? Trump and Xi are going to have a meeting? Okay, and what did I tell you guys? I said, just watch. Don't be surprised if Trump ends up pulling out of this thing, right? And sure enough, he suggests potentially canceling the meeting. I wouldn't be surprised if now, because he escalated to that, President Xi's like, you know what? Yeah, we're not having the meeting. The meeting's off. Like, I wouldn't be surprised at all, right? So this is that game that's being played. People thought, like, when they heard that news, oh my gosh, U.S. and China are going to be best friends again. I'm like, really? Okay, I don't know about that, right? Now, this whole tariff situation matters significantly. There's still a lot of Americans that don't understand when they hear Trump's rhetoric in regards to tariffs. He makes it sound like China's paying for the tariffs, right? Listen, and I hope every single person watching this video understands, China is not paying the tariff, okay? The importing company pays a tariff. So if you're a business owner and you get some product or whatever made in China and you import it into the United States, you're the one that's going to have to pay that tariff, okay? So it lowers business profits in the short term. And that is up until those companies can then pass on that cost to the consumer. The consumer pays in the end, right? So the initial one to pay, China never pays in this situation. The ones that pay are the business owners, and then eventually they're able to pass that down to the consumer. So I pay for it, you pay for it, we all pay for the tariff in the end. And it's basically just a big tax on you and me, okay? That's what it ends up becoming in the end. And the strategy there's a strategy behind it. The strategy is, hey, if you hit enough companies with it, consumers with it, eventually people would be like, okay, we got to build everything in America, right? We're going to start making the socks in America. I don't know. We'll see. We'll see about all that, right? But that whole show, let me be very clear, is a show for you. I tell you guys many times, the stock market is a magician, right? And as a great magician, what do you need to do? You need to get your focus off of places that, let's say, you don't want them to focus on. So, if you're doing something over here, sleight of hand, you need to have them focused over here. And they don't even know what's going on, right? So you get their attention going different places and do this, do that. That's exactly what we have going on right now. And you pull back the curtain, and then you're going to find the two things that are actually causing the market drama. And it's not the tariff drama. That's just the good reason to give out to the media, to give to everybody out there, and everybody say, oh my gosh, stock market's falling because of the tariff stuff, right? But there's actually two much bigger things and much bigger worries at play, okay? The first one on what's actually going on here and what's actually sending the stock market down huge is this. Listen, we're now 10 days into the government shutdown, right? There's a lot of Wall Streeters, countless of these. I couldn't believe it, and I love having that reaction channel because I react to the videos. Remember just, a week or two ago I was reacting to videos, and these Wall Streeters were going on there so confident. Oh, the government's going to figure it out. Oh, it hasn't been an issue in the past. They'll get it solved quick. We probably won't even shut the government down, and if we do shut it down, it will only be for a few days, and then they'll be right back up and operating. And I was like, I don't know about that. And I said to you guys, I don't think this is going to be solved fast at all. And what did I tell you? I said, Trump's going to be stuck in his ways. The Democrats are going to be stuck in their ways, right? And this is the only shutdown in my 17 years of being in the stock market I've ever taken serious. This is the one. This is the one that if it could go a long time, this is the one. And every single Wall Streeter I could see, they were not taking this serious. It was fascinating to me. I'm like, what are you guys looking at? Like, do you know the positioning of both sides? I don't think they actually knew it. And so they thought they were never going to shut down. Then they thought, oh, if they do shut down, it's going to be solved in the first few days. And here we are 10 days in. This is going to go a lot longer, folks. A lot longer here, okay? Now, here's the deal, okay? Some federal employees received notices Friday telling them that they will be laid off in 60 days. CBS News has confirmed. Several agencies have announced they will cut staff, including the Treasury and Department of Homeland Security. House Speaker Mike Johnson said, "We are not in a good mood." As he noted, Friday marks the first day that federal workers will not receive their full paychecks since the shutdown began October 1st. The continued stalemate also makes it highly likely members of the military will miss their next paycheck, expected to arrive on October 15th. Oh boy. Oh boy. Do you know how many people work for the federal government? Do you know how many people are involved in the military and count on those checks coming in? Right? So now we're talking about massive quantities of people out money in regards to this situation, right? If you're wondering how long could something like this go, I think worst case scenario, folks, this could go all the way to 2026. Worst case scenario, okay? The higher probability is the stock market keeps tanking for the next bit of time, and maybe there's a resolution, maybe December or something like that. But I don't know why either side would give in right now. I think the side that will give in the end will be Trump's side. I think Trump will be the one to give in the end because I think the stock market will keep going down, and eventually big money will put the pressure on him to make a move there. But if you're the Dems, I wouldn't make a move here. I would say, we can keep it shut down and, let the economy crash on your head. Who's in office right now? Everybody's going to point to Trump. He's the one at fault, right? Obviously, people that are super on the right are going to say, no, it's the people's left fault. But at the end of the day, I think the majority of folks, and that's what matters in the end, the majority will say it's Trump's fault. That's how it always is. Whoever's in office, they blame. If it's Biden, they would blame Biden. If it was Obama, they'd blame Obama. If it was Bush, they'd blame Bush, right? No, this is where it starts to matter significantly for money, okay? Check this out. Furloughed workers, okay? Estimates are around 750 to 900,000 non-essential federal employees are furloughed. These individuals are legally barred from working and are not receiving paychecks. I'm not talking about this is 20 people. This is 750 to 900,000 people. Estimates suggest around 700,000 essential or expected employees are required to work, but they're not receiving paychecks either. Imagine having to go to work and you don't even get a paycheck. That's got to be brutal. This group is critical personnel like air traffic controllers, border patrol agents, and some staff at agencies like the State Department. Oh my gosh. Imagine you're an air traffic controller and that's a stressful job as it is. And then you're not even getting a paycheck. You have to hope to get a paycheck in the future. So when the government shutdown ends, these individuals should start getting paychecks, but I've also heard rumors that, Trump might not want to pay some of these people. It's a horrible situation. If you're a federal employee, I couldn't imagine it. That's just brutal, right? The total number of workers not being paid is therefore estimated between 1.5 and 1.6 million federal employees. Oh my gosh. Now, if military starts not getting paid as well, brutal. Brutal. We could be talking about millions upon millions of Americans not getting paid, right? And that's going to create massive problems where? In the economy. You can't have a million people or several million people just not getting paychecks and it doesn't start to actually affect the economy in a very negative way here in the fourth quarter, right? Let's put it very simple. If you didn't get your paycheck today, are you going to the Cheesecake Factory tonight? Of course not. You can't afford to go to a restaurant. Are you kidding me? You're going to be looking for ramen noodles. What are we talking about here? No way, right? So suddenly you don't go to the restaurant, which means, guess what? The staff doesn't make as much in tips, right? All those tips aren't quite collected. The business owner, the restaurant owner doesn't make quite as much money. And it's a whole situation, right? And then those people have less money to go out there and spend in the economy because of this, right? Are you going out there to buy a new pair of shoes this weekend if you haven't received a paycheck? Of course not. I don't know, whatever shoes I got, I'm going to make them work for now because I'm not even getting a paycheck right now. Last thing you're doing is going to the mall and going out shopping right now, right? And once again, this is, if this was 20 people got put out of work in the United States, okay, big deal. Ladies and gentlemen, we're talking about millions of people are not going to be receiving a paycheck. Imagine this goes a month, 2 months, 3 months. Imagine if this goes all the way to 26 or pushes closer to Christmas. You're going to have a disaster in the economy. There's just no other way around it. Like, that's going to be horrible, brutal numbers for businesses that they start to report. And then businesses start to have to lay off workers. And all of a sudden, you got a big unemployment crisis. And then, I think Trump thinks like all these federal employees are going to go out there and just go get like jobs at private businesses and things like that. Private businesses aren't really hiring that much right now. They don't need more workers right now. This is not that sort of time. 4 years ago was a different situation. Not right now. It's not like Foot Locker is like desperate for workers right now, or a Cheesecake Factory, or any of these companies for that matter. And then if you slow down the economy because all these individuals aren't getting work, right, or aren't getting paid, all these federal employees, you think these businesses are going to need any workers? They're going to have way less customers than they usually do. This is not a good situation, ladies and gentlemen. Okay. Now look at a stock like Lowe's. I heard this yesterday. Lowe's stock has gone down 9 straight trading days. It started going down just before the shutdown. Why is a stock like that going down day after day after day? You got to ask yourself that, right? It's because they view like if you got a million or several million people out of work suddenly, not receiving a paycheck, you think they're going to go out and spend a bunch of money this fall to do this or do that to their house? Of course not. Oh, heck no, right? And so even, by the way, was that stock down again today? Yup. 10 straight trading days, Lowe's stock has gone down, right? Who's going to go out there and start fixing up stuff around their house? Be like, oh, let me go paint this room. Let me go do this. Let me go put some new flowers in the front yard. Oh, let me switch my grass. No, not when you're not getting a paycheck. Right? Whirlpool stock all the way down to $71 now. It's a new 5-year low after 5-year low for Whirlpool. If you're not getting your paycheck, you're going to go buy a new washer, dryer, oven right now? Microwave? Oh, heck no, right? That stock is now down 61% the past 5 years. Just an absolutely brutal crash. Look at a stock like RH. That's a high-end furniture maker, right? And even a stock like that continues to show so much weakness, down 54% the past 5 years, down another 6% here today. If this market gets hit pretty decent over this next 2 to 3 months, you're going to see RH break 100. 100, ladies and gentlemen. And this was a stock that was $700 plus at the end of 2021. Unbelievable, these moves, right? There's something screaming recession right now. Screaming at the top of its lungs. And you know what it is? Oil. Oil is screaming that we are in recession right now, or we're about to go into recession, okay? Look at a 3-year chart of oil. Oil all the way down to $57. We're not even in wintertime right now. Imagine, if this economy gets worse, imagine where oil price is going to be in December. If we're at 57 in October and we don't even have a confirmed recession yet, oh boy, oil is screaming from the top of its lungs recession. By the way, remember I told you guys at the beginning of this video, I'm going to have my Instagram and X link down there as pinned comment today. You might want to follow me on X. I posted this on my X page earlier. I said oil price and housing related stocks are screaming recession is here or hitting over the next 6 to 12 months. Only good news is rates should plummet the next 6 to 9 months. Get ready for fireworks. Now, when is this going to be done, this bill? Not short term. Okay, the Senate has adjourned, is not scheduled to return until Tuesday. The House of Representatives remains in recess with no plan to return next week unless the Senate passes the House-approved funding bill. Good luck at doing that, right? And as far as what the Democrats are fighting for in regards to the situation, so from what it looks like here, if the Affordable Care Act, tax credits are basically taken away, what's going to happen is insurance premiums are going to spike ridiculous for like millions of Americans. It's not a small my health insurance is going to go up like $5 a month or like $20 a month or like $10 a month. No. It's massive figures in regards to how much people's health insurance is going to go up. I've seen estimates 20%, 30%, and some even a lot bigger than this, right? My friend and neighbor Graham, he posted this. He said, at what income level, net worth, does it make sense to self-insure? How expensive is the most life-threatening illness or accident if one were to pay outright or in cash? I mean, that could be, many hundreds of thousands of dollars or even millions of dollars in that sort of situation. So do keep that in mind. But that's a question people are having to ask themselves is it even worth it to get health insurance, right? If these premiums do jump massively. So, Trump doesn't want to let the Democrats get their way. The Democrats don't want to let Trump get their way. And this is going to be an old-fashioned standoff for a while, and we'll see who wins. But, woo-wee, it's not a good situation if you're the one caught in the middle. And who's the one caught in the middle? it's federal employees, but at the end of the day, because it's such a large amount, when we're talking about all the federal employees, and then if the military starts not receiving their checks, it starts affecting us all. Everybody starts getting hit in regards to this situation, right? Now, the crypto market's starting to get really scared of this as well. Ethereum is down 12% here. Bitcoin's down over 8% here, down almost $10,000 today alone, right? It's definitely the market saying, oh boy, we're getting worried about this whole situation, how far south this could go, right? Additionally, you're getting this tells, the signs that the market is saying recession, it's here or it's about to hit, and here's why. If you look at silver, for instance, silver, all-time high, right? 5-year high, highest, I've ever seen that in my lifetime. Like, it's incredible. And, silver is something that usually rallies before you get to a recession. And then gold is something that usually rallies right before you get to a recession. But do keep this in mind. Gold, a lot of people assume once you get the confirmed recession, gold will go up still. No, a lot of times what will happen is gold spikes huge. Before you get the confirmed recession, you start getting the confirmation that a recession's hit, and then gold actually starts going down significantly as well, and then eventually bottoms out and starts heading up again. So do keep that in mind. But listen, man, this is not a natural move for gold. Gold is up 50% this year. 50%? That should not be like that. Gold should be asleep almost always. But if it ever spikes huge like that, a lot of times, ladies and gentlemen, it's because it's basically telling you, hey, recession, right? You're starting to hear news like this. Like while I was prepping this video, I had my phone on Fast Money. Hear this news break, Jefferies Financial. Morgan Stanley asked to pull cash from Jefferies Point Bonita. Just situations like that. And that stock's down big after hours. The scary thing is, the more south you push in regards to a situation like this, the more stuff starts to be discovered, right? No, the second reason why this is happening, why this is going on, okay, listen. We got really rich in regards to where the market was priced, okay? You look at a forward P, we're now down to about a 22.5 in the S&P 500, but we approached, recently close to a 24 number on the forward P. Anytime you really approach, like I backed up over the last 5 years, and guess what happens almost every time you approach that 24-ish number? Very shortly after, you start to get a big market downtrend. We reached right around that 24 level back at the end of 2021. And what happened after that? Obviously, massive bear market, right? We reached that 24-ish level right here, right? And then what did we have shortly after that? We had a big pull down for the market, and then we had the tariff situation drama, right? So here we are in another situation where we hit 24 recently, and don't be surprised if that number goes a lot lower, right? And you get a drama show here. So when valuations push up high enough, the market will eventually find a reason to send the market down. It's never failed. Like literally every single time valuations start to get out of whack, they get too high, the market will always find a reason to go down. Never fails. Always. And so it's just a question of what reason will it use at a particular time, right? And it's always a different reason. But I've never seen it where valuations just continue to go higher and higher and higher, and it kept up. No, eventually it breaks, right? And you get something to happen. Here, it was inflation was out of control, so what they had to do is raise interest rates significantly, and then big tech earnings crashed. So that's why you got that massive downdraft, right? This situation here, or actually this situation here, I think this was around SVB Bank, some of the regional bank problems. This situation here was the tariff drama, right? And then this will be blamed on government shutdown and a bunch of other things that we're going through now at this point in time. But it's natural, and they're going to find always a reason to do it, right?